What's up, guys? Welcome back to the channel. This is still me, Solomon of Wisdom, and in today's lesson, I'll be sharing a lot of valuable insights. I know you've been struggling on the financial markets and you are looking for a way to find success in this market. Don't worry, but have it in mind that on this channel, we've succeeded in building a lot of successful traders. I'm not talking about the students in my private community. No, I'm talking about people who watch me here on this free community, the results I get from students week in, week out. I believe as we continue, we will keep elevating a lot of traders, and a lot of profitable traders is going to be built both here on the free community and my private community. The end goal of everything I do here is to make sure that profitable traders are built every year. I think I've been doing this free YouTube lesson for about 3 years, and we've succeeded in achieving a lot within these 3 years. And I believe before the end of this year, you watching me will be part of the successful traders that will be counted. Let's jump straight into what we have for today. Today's lesson is actually going to be exceptional because I will be sharing a lot of value. This is EURGBP, the 2 hours time frame. This is the first example I'm going to use for today's lesson. This particular price action was around 7th of January. Just like I do, all the lessons I share are VIP content. I usually teach based on recent price actions, what is happening currently in the market. I don't like teaching with old price action. I like using what is currently happening in the market, the recent results I see in the market. So here is the price action. This was when price presented 4% in the market. I'm going to give you the key to profitable trading. You know, we've been talking a lot about trading, and sometimes people just watch lessons and go without reflecting back on what they are being taught. After today's lesson, go back to your price chart and try to identify every single thing I'm going to tell you in today's lesson. Now, key to profitable trading. Do you know that knowing the trend and having a bias is just the starting point? When we talk about smart money concept, because smart money concept is a strategy I teach, and week in, week out, I'm going to come here and talk about smart money concept. I'm not going to talk about something different. Why? Because smart money concept has given me the result I need in the market. So I'm going to die with it. Where your treasure is, there your heart will also be. Smart money concept has given me good results in the market, so my heart is always there. So I'm going to stick to it till when it stops giving me results. Like I said, knowing the trend and having a directional bias is just the starting point. Knowing your order flow, knowing your liquidity areas, knowing your market structure, all that is just the starting point. It's not enough to guarantee profitability in the financial markets. The most critical factor that determines success in the financial market is your entry strategy and your exit strategy. Where and how you get into your trades is very, very crucial. This includes identifying the right entry point. Now, identifying the right entry point is actually one of the key factors or the key elements of being a profitable trader. This includes identifying the right entry point, setting up your trades, and managing your risks effectively. This is it about your entry. When you're able to spot the right point, you'll be entering your trade. And selecting the right point, this drops down to understanding supply and demand, because supply and demand is one of the factors that moves this market. As a matter of fact, supply and demand and my other blocks, I call these key levels. These are key levels where you spot your entry. And when you spot these entry points, another thing that is actually going to make you profitable is managing your risks effectively. Just like I said, the second element that is going to make you profitable in the market is your exit strategy. And a lot of people struggle as well when it comes to their exit strategy. Some people might have a good entry plan, a good entry strategy. They find themselves entering good trades, but how to exit is a problem. And you need to master these two elements. You don't master one and leave the other. No, you need to master these two. Now, where and when you get out of your trade is important. This includes setting realistic profit targets. A lot of people fail because they don't set a realistic profit target. Some of them might actually set a realistic profit target, but they don't adapt to the changing market condition. You might have a specific profit target, and the changing market condition can actually affect price, and it won't get to your profit targets. This is all we'll be covering in today's lesson. Now, talking about setting a realistic profit target. Now, let me do a quick sketch. I believe the sketch is going to help you understand what I mean when I talk about setting a realistic profit target. Most times when we trade smart money concepts, the price actions are almost the same all the time. So at this particular point, what you can clearly see is now that price is at a key level. So let's assume, okay, you got the right level which you're going to enter this trade from. Most people who trade smart money concepts, they usually set their target at the external range liquidity. This is the buy side liquidity because this is a bullish example. You don't always need to target the buy side liquidity to be profitable. If you take a look at most of the trade opportunities I take, you see that 70% of my trades, I take my profits before price gets to the buy side liquidity. You can take your profits inside this range and still be a profitable trader. It's very, very possible taking your profits inside the range and being a profitable trader. Now, let's drop into the main context of the lesson, showing you examples and doing a chart breakdown. This is EURGBP 2 hours time frame. Now, when I was looking at this particular pair, I saw things for myself. The very first thing I identified right here was the current condition of the market, because it's actually very important to understand what price is doing. Now, we have three conditions of the markets. We have a bullish market, we have a bearish market, and we have a ranging market. So when I looked at EURGBP, I saw that price was actually in a range. I marked the high of the range. This was the high of this particular range. Over here, we have the low of this range. So I marked price like this, and at this point, I didn't even know what to do. Because when I see a ranging market, I usually avoid the market and I wait for price to give me a clear direction before I make a trading decision. Now, looking at this market like this, I don't even know where to trade from because price is just inside this particular range. So I just said to myself, okay, I will let price run. When I have a clear movement and a clear direction, I'll come back to this price chart and make a decision. Now, let's play price forward and see. Now, price reacts massively to the upside and it took the buy side liquidity. So when price took the buy side liquidity, this was when I had a clear directional bias. So this is what you need to understand. Now that price took the high, if price actually swept liquidity above this high and moved back into this range, I might have a bearish bias because I'm going to see that as a turtle soup and we're going to expect that price is going to continue lower. But in this case, price swept the liquidity and closed above this particular high. So let me mark out what I was seeing immediately this price action occurred. Now, this was where I was looking at this low as a liquidity sweep, where price took this particular low we have right here, a valid liquidity sweep around this area. And if you want to look at the price action, you're going to see that price moved with an institutional candle. So this is your institutional candle right here. Before price ranged a little. And to confirm this, we have the break of this high. Now, when we had this break of this high, remember what I said. Understanding this you have right here is not enough to make you a profitable trader, but it's actually a stepping stone, okay? Having the understanding of what price is doing is a stepping stone, is going to help. Now, when I had this, I had a point of interest around this particular area. I think the first area I had was the particular one we have over here. And when I marked this particular point of interest, I saw it as a very high probability trade opportunity. Why? We have liquidity resting around this area because this particular level we have right now is a build of liquidity, which sometimes I call a smart money trap. Now, I have a second point of interest, which was around here. Because if you look at this price action, you see momentum kicks in from here, price reacts massively to the upside. So this was also a very good area which we could trade from. Now, when I trade in the financial market, I'm someone who is very, very careful when I trade because what I'm risking in the market is a real money. So sometimes emotion kicks in and In order not to be controlled by my emotion, I just have to select the zone which I know is the safest. Is this zone a valid zone? Yes, it's a valid zone. But which zone is the safest to trade? The one we have down there. This is the safest zone to trade right now. So I had to delete this particular zone and I focused on the zone that has the highest probability. And what makes this zone a high probability setup? Liquidity is resting above the point of interest. If you look down here, we have pricing efficiency, which I love to spot anytime you see me spot a trade opportunity. And over here, we have liquidity sweep, price sweeping the liquidity underneath this low. So this is the whole trade opportunity right here. And you see, this particular price action was around 8th of January when price took the liquidity above this particular high. Now let's go to the 4 hours time frame, because we'll be playing price forward and we're going to see how price reacts to this. And I'm actually going to show a second example and we're going to compare it to this first example. Now, when you compare these two examples, they might look different, but if you look down to these price actions, you see that price is basically doing the same thing. Now, I said something when I shared one of the results I had last week, when I shared it on my social platform, that I said that price presents the same patterns and these patterns repeat over and over again. The only thing is just the interpretation. Someone might come and interpret something different, but these price actions are just the same thing. Let's go to the 4 hours time frame. So here is the 4 hours time frame and you can see these trade opportunities. So let's play price forward. Now price starts to react. Now the price action you see right here is a clear bullish price action, and I wasn't able to get involved in these trade opportunities because if I was actually paying attention to these areas, you will see that price was presenting good opportunity, break of this high, it came back for a mitigation around this area. But you can see that a mitigation, price continued again. This is a bullish order flow, break of this high, it should trace back again and it came back for another mitigation. But the thing is that I wasn't interested in this area because I wasn't only waiting for this level, I was looking at other pairs which was giving me trade opportunity. So it was one of the reasons I had patience in waiting. Okay, so here on the 4 hours time frame, I think I did some refinements because the zone was actually very large. No need to wait for this long and miss the trade. So I had to include this particular area. Now playing price forward. See, price continued higher with good price action. Now, at this particular point, this is where we start seeing a shift in structure, price changing in its structure. So this was actually a very good one. And finally, price came back to this particular point of interest and we have a reaction. If I actually took a trade from here, I would have made 4 to 5%, but I wasn't interested in trading from there. I was just waiting for the level that has the highest probability. Playing price forward. See, good reaction, then price drops. Hope you can see that. So price respected the level, which is what I'm trying to say, that getting a very good entry is very important. And exit plan is very, very important. Your exit plan is one of the things that is going to keep you in the market. Now, let's assume that you actually got involved in this particular trade and you were expecting price to take the buy side liquidity. You see, you might get involved, make good profits and still lose it. So my advice today is that you should set realistic goals. Make plans on how to exit the market. Exiting the market is actually very important. Now, let's assume you went for 4 or 5%. You would have made it from this trade opportunity and you leave the market calmly before this reversal. But now, let's assume you were deciding to take this trade or target the high of this level. You won't make that money. So this is one thing you need to take away from this lesson. Set realistic goals and take quick profits from the market. So this was the area I had interest and I was looking to get involved. Now, price came back to the level. This was when price came back. Mitigates the points of interest. After waiting for so long, spotted the price action on 7th of January, then had the trade opportunity around 8th of January. And when the price came back for mitigation, price came back to mitigate this level on the 27th of February. So another thing you have to note is you have to be patient, okay? As a trader trading in the financial market, patience is going to keep you in the game. So what was my plan right here? My plan was waiting for price at this level. Now, imagine seeing this reaction to the upside and you feel like, okay, price is leaving without getting to your point of interest. Then you enter into early buys, you see price is going to reverse and you're going to lose money. So being patient, being consistent, and following your plan, and the most important of them all is being a disciplined trader is going to keep you in this game. Now, playing price forward, let's see how this reacts. Price blast to the upside, and I made 4% and I left the market. So this was the exact trade opportunity. EURGBP 1R was offered, and you see price mitigates the level, react massively to the upside, and I made 4%. And you see these two markings right here. It was done on the 7th of January when I had that price action. So this was the same setup right here when it was offering just 2%. And this was where the trade opportunity was shared. Okay, this is me sharing the trade opportunity to my VIP students. So this is it about this particular example. So I would want to show the second one. The second one we're going to break down, which I said we're going to compare to this one, is this. This particular one is on GBPJPY. So this particular trade opportunity offered about 6%, but as usual, I went for 4R, right? Let's see this price action on the price chart. But before that, let me introduce a mentorship. Our advanced smart money mentorship is still running. So if you want to enroll for a mentorship, this is the best time to enroll. This is fun to trade advanced smart money mentorship. So if you join this mentorship, I promise you, you're going to benefit a lot because you're going to have access to watch our VIP advanced smart money concept, the weekly chart breakdown where I always come live to do some market analysis with the students and looking for trade opportunity. The VIP support group is the VIP community where I showed you the trade opportunity I had with my students, which I shared to them as well. And they're actually going to have access to the second community where you can as well share what you see in the market and interact with other students in the community. Then we have the premium possible setups, which are the trade opportunities we share. And we usually have weekly Zoom meeting where I teach new things to the students. So it just costs $216, and if you see, you're going to have a lifetime access. So it's very affordable, and you can decide to pay now if you want to enroll for this mentorship. This enroll button is where you can decide to enroll from. Now, if you drop lower, this is where we have the ratings from our students, and this is their reviews. You can go ahead and see more of the review. So once you see all these are the reviews we had from the students. These are actually the free mentorship I offered here on YouTube about last 2 years. So these are reviews as well. So you can just take a look at all these and then decide if you want to enroll or disregard, right? It totally depends on you. So here is the second example, GBPJPY. Now, I've won my last two trades on GBPJPY, and this particular trade, I'm about to explain. One of my students, I think he won two trades from this particular setup, which I'm going to break down. And after the breakdown, we compare it to the first example, and this is going to help you understand that these price actions are the same, just that it's different pattern. But if you look at the confluence, we look at these are almost the same trade opportunities. Now, let me show you the first area I got involved on GBPJPY. It was around this particular area. After I made 4%, I left the market. So I'm not going to talk about this particular one. Let's focus on the second price action we had. Now, this particular price action, why did I take this particular trade? Now, the level I marked as my point of interest is the pin bar we have down here. Firstly, the confluence I was seeing is that price reacted to the downside over here. You see, price closed underneath this low, valid break of structure. After that, we had this reaction, price pulled back, then institutions entered the market, reacting massively to the upside. So this was where I was able to spot the market structure shift. So it's a valid market structure shift. Now let's assume I got involved in this trade and I was expecting price to take the external range liquidity before I take my profit. You see, I think I wouldn't have made any money from this setup. I would have made some money, then I'm going to lose it back because the market condition has actually changed around this particular area. Yes, we got involved right here selling. Now, at some point, I took profit and I left the market. Now, the market condition changed because institutions entered the market. We had a market structure shift, which indicates that we're going to have change in the institutional sentiment. Now, what else did I see around this area? Price took liquidity underneath this low, which is something I love to see. Seeing this always give me the confidence. Okay, I was talking to my VIP students when I told them that when I spot this, it increases the confidence I have in the markets. So valid liquidity sweep right here. Then I marked what? The point of interest which I'm going to trade from, which is this pin bar. Having this trade opportunity this way is actually very nice. This is a high probability trade opportunity. But there are things I see in the market which gives me the confidence, and we're going to see that right now. Now, playing price forward. This is exactly what I'm talking about. We have what? A build of liquidity. Very similar to what we had the last time. The last trade opportunity we had, where did price build that liquidity? Where did we see that accumulation? The accumulation was at the left side of the market. It was around here. That was where we had price building that liquidity. But in this particular case, price changed it, and this is where we have the accumulation right here. So this is price accumulating around this particular area. Same price action, same procedure. Seeing this alone tells you that this is a smart money trap. And after this trap, price is going to sweep this liquidity. Very, very easy. So when I spotted this, it increased the probability of this setup. Was it a valid setup? Yes, it was. Now, this build of liquidity, does it increase your confidence as a trader to take this trade? Yes. This gives you the confidence that we're going to have this liquidity sweep again. Because I said having this liquidity sweep increases the confidence of a trader. Personally, it does. For me, it increases my confidence. Now, I believe that price is going to sweep this liquidity tags into my zone. Yes, sometimes price might sweep the liquidity and it won't get to my zone. And I consider that as a missed trade opportunity. But I have the confidence that if price sweeps the liquidity, mitigates my zone, then price is going to move far away from this zone. Now, let's press price forward. And this is exactly what we see right here. Price came over here, sweeps the liquidity, and you see the exact same thing. The zone is a pin bar, and after the liquidity sweep, we only have a pin bar. This is another confluence you need to be looking out for. Now, price starts to react to the upside. I hope you see that price reacts to the upside, takes the external range liquidity. That is the internal range liquidity, and now it's dropping back. And my students actually caught another good trade, which I wasn't interested in taking because I had a similar trade very similar to this one. So I paid more attention to that particular one and disregarding this one. So paying attention to that particular trade made me miss this trade opportunity. And I'm actually going to show you that particular one on the VIP. So I think one of my students also shared results that he took a trade from here. But for me, this was not a valid setup, so I didn't look to include that particular one. But the particular one I spot was the level we have down here. And this is actually a very good level. And this can actually also serve as an entry confirmation. Now, what are the confluence which made this a good trade opportunity? Liquidity sweep. Price takes liquidity underneath the low, which is something I love to see. Now, price went ahead to build new liquidity, takes liquidity and builds more liquidity. Smart money trap right here. Hope you can clearly see that. So a very good one, price equally break internal structure right here. So with an institutional candle. So this is a very good trade opportunity right here. Now playing price forward to see how price reacts to this. Boom, price came back, mitigates the level, and we have a good reaction. So this is the recent price action right now. And I hope this makes sense to you. Let me show you. So here was the result. Price offered about 6%, and this is a very good trade opportunity. This was when price offered 2%. I hope you can clearly see price offered 2% around this area. And this was the trade opportunity when it was shared. And just like I said, price built liquidity, which increased my confidence to take this particular trade. Okay, so let me quickly show you the one which I was looking at, which made me not to get involved from that second zone which price presented. So this was it right here. That particular setup was on GBPJPY, but this was on EURGBP because it's very similar to the one we had there. This is it, price missed getting to our entry because we had that level. Price left liquidity inducement area around here, then sweeps that and react. So this is what I said. Sometimes price might sweep that liquidity and not get to your zone. So this is a total sweep, and this was what it looked like when the setup was shared to the community. So I hope this makes sense to you, and I believe that with this lesson, you can make amendments to your trading and you can decide to implement what you've learned from this lesson. Now, comparing this trade opportunity to the very first one, which I explained, what are the similarities? The first thing you see is that we have build of liquidity. And the other one, you're going to see that price also builds liquidity at the left side. So these are things you have to note. Liquidity is important. Spotting liquidity areas is important. Selecting zones that has high probability is important. And taking your profits and leaving the market is important because you can't take all the profits. You will always leave money in the market. So this is it for today's lesson. Go back to your price chart and practice the thing I've explained in this lesson. And from today, start to set realistic goals. Okay? So thanks very much for watching this lesson. See you in the next lesson.